If you had your face ripped off this week because of the market reaction to the Fed, you're not alone. As you can see, the storm clouds are gathering here in Hawaii, and they look like they may continue to gather in the marketplace. Before we get into today's session, remember there'll be a drop down over there that talks about the AutoPilot Trading system. Check out that video. It'll let you know what the heck happens with AutoPilot Trading. It's really a good system. And as I said, the market rips to the downside. I'm going to be covering some points in today's session, along with, we actually found 3 stocks that look pretty darn good going into next week. Not going to be a big buyer, but they look like they could be bottoming out. But as I said, how do you review a trade after you've exited to make sure that, one, you capture and learn as much from it as possible? We covered that in today's session towards the end, so stay tuned. Let's jump into today's session and get the umbrellas! Okay, good afternoon, everybody. This is Dennis Wilburn, the Active Trend Trader. I want to welcome both Steve Farrar and Anil Parikh to this week's sessions, and everybody else that's online and also joining us over on the YouTube channel, Market Tech Talk. In one word, gentlemen, one word, you get one word. How would you describe the current market situation?
Interesting.
Very testing your patience.
Testing your patience. Okay.
It's more than a word. I'm sorry. More than a word.
And Steve says bad. I agree with that. And guys, if you would please put any comments that you might have into the chat box so everybody can see it. That way we get a recording of that so I can answer any questions that might come up later. Yeah, I kind of like the word challenging. Those of you who were in trading this last week, the Active Trend Trading and AutoPilot Trading system has kept us out of the market primarily. We kept us very small positions and all that kind of stuff. But I had a couple of option trades on that really took off on Wednesday after the Fed met, and I'm going, all right. And I was in a meeting, unfortunately, with my pastor actually, and through the into the market. And so I, come out of the meeting, I'm going, oh, well, yeah, this is really great. I was up nicely with those options. And so I adjusted my stops and all that kind of stuff. And the next day, I'll be darned if the market, I basically, the feeble Fed rally was mauled by the bears and squeezed the life out of it. It actually jumped over my stops. And so I got out with some profits, but not nearly as much as what would have happened if I could have closed out on Wednesday. But you know what? That's the way the market works. And
be happy it's not negative.
Exactly.
On the trade, yeah.
And so let's go ahead and get all materials presented are for training purposes. Traders should always paper trade any new method prior to the risk of their own personal capital. Past performance is not an indication of or promise of future performance. Here's where we're sitting. That's where I finished April at. And last week, again, we're up about 15%. We're up still about 15%. However, the markets have continued to fall. I call your attention to a couple of them. One, NASDAQ, year to date, down 21%. And it is in a bear market. Russell, down 17% for the year, 24.7%. The interesting thing about it is the S&P and the Dow have not joined the bear market list yet. Now, I say yet because the charts will tell us when it's time to get back into the market, and we may have some setups coming up this week. I've seen the stock picks that both Steve and Anil have, and so we may get a rally attempt to push back up, and so I'm interested to see what's going to take place there. And so with that, let's go ahead and jump over to the index because we've got a special treat. Right after I do the index review, Anil's going to reveal to us what's going on with the the triple screen that he developed up in the Delaware group. We're going to be taking a look at that. A couple of other announcements is one, Bay Area Moneymakers is meeting on Tuesday, 6:30 Pacific time. Go over to Bay Area, the BAM meetup site. And we're going to have a guest speaker, Lee Tanner. Those of you who know Lee, you know he's a phenomenal trader and also an aficionado on the Can Slim system, and just a formal, well, wasn't an actual shipmate of mine, but he's Lee and I got our commissions in the Navy through the same program, and so really great. When I lived in the Bay Area, Lee would come down and present for the BAM. He's going to be doing that again on Tuesday, 6:30 Pacific, where he's going to be talking about the margin, how to trade margin that has a two-edged sword. In our plan for this week, as we start looking here at the S&P, have in place a plan that basically going to protect your profits and capital. You know, what is your plan? If it's not written down on paper, you don't have a plan. And if that's too blunt for you, tough. It's the way it is. If it's not written down on paper, you don't have a plan. Because these mental stops and all that kind of stuff, you know how well they work in a bear market? They don't. So anyway, I'll get off my soapbox for a second and take a look at the S&P. Before I do, Parikh, I want to thank you so much for the email you sent me. That was again, thank you for your kind words. And I'm glad that you're enjoying the Active Trend Trading's journal that you picked up over on Amazon. So thank you very much for those kind words. I'm glad it helped to organize your thought and organize your training. So what's going on with the S&P? As I highlighted earlier, we've basically done a round trip. Here was Monday. So we didn't want to jump right into a position on Monday, Tuesday, because this was the Fed. What happened? Fed, they like what Jerome Powell had to say initially, and it took off like a rocket ship, hit the 20-day moving average, stopped dead in the water. This is not a sign of strength. This is a sign of weakness. So what's happening now? We're having a retracement back into the support level. And the thing to remember is this. This candlestick right here, this bullish hammer / bear bullish harami is still in effect as a reversal signal. So it will remain in effect. And so we may be testing the lows and then a rebound on Monday, or we'll see how it finishes off today. But that reversal signal right there is still in effect. On the weekly charts, take a look. What do I have? I have an inverted hammer at a level of past support. On the weekly charts, again, bullish reversal signal. Now, it has not been confirmed on the weekly or the daily totally. But we are getting the retest, and so we want to pay attention. Might we want to float an order down here at about the 406.70, 407 level for a call option trade, or trade the leveraged ETF that goes along with this, which is in this case UPRO. We don't know. As again, if we blow out the bottom here, where are we going? Next stop, 396. We blow out that one. Next stop, where is it? About 369. As we continue to drop, right there is the 38% retracement level on the big fib from the highs and lows going back to March of 2020. So that would be one of the next stops down, and there's a 50% retracement there. Again, look to your left. Yes, we have support in place. Running quickly to the Qs. Qs, there was no reversal signal on the Qs, but the action was very similar, very interesting. We're undercutting significantly Monday's low. So this tells us that the Qs may have some additional room to run. I like the Qs down, or the NASDAQ down at about the $300 level, or all the way down to about 387. Note, the TSI is continuing to go down. I have a 3-line cluster on the weekly chart, 3-line cluster on the daily chart. And so it's prime for a reversal and a rally. Yeah, Mark, you could sell puts on the spiders, or you could let it get down to that lower level, just, down into the wicks a little bit more. And so that's another thing to look at. IWM. What's going on with the Russell? Russell is like the Qs. We did not have a reversal signal, but it came up, hit the 20-day moving average, reversed down off of that, and started selling off. On Wednesday, on all three of the indexes, I actually put out a note to our premium AutoPilot Trading members that if we get a pullback, I basically said, I'm not going to fall for this bear trap, because we may get a sell-off, taking profit down to about the 8-day moving average, and then it may bounce from there. But I wanted to let it prove itself. What happened? We got a classic sell-off to the 8-day, and then it just said, see ya, I'm going lower, and away it went from there. So I'm liking IWM actually down somewhere between, when I say liking, that's where I'm looking at a next level of wholesale prices that I'm interested in particular, getting into a position down about 173.12 to 168.34. Again, I have kind of a inverted hammer on the weekly 3-line clusters all over the place. So we know what's the rule on the 3-line cluster: 1 to 4 trading periods after the 3-line or 2-line cluster, you can expect a reversal. At the same time, though, what else is going on is that's since we have them on both the weekly and the daily. So we're looking at somewhere between 1 and 4 weeks for a potential reversal. Hey, Pete, how you doing? Good to see you. How's flying doing? So that's what I'm looking at. Steve and Neil, what do you think?
Nothing to disagree with. We're just uncertain. We're on a cusp. We can go either way. We can bounce. We can go greatly lower. I have no clue what's going to happen.
Okay. And what's the best thing to do when you have no clue?
Raise all the cash you can.
Raise all the cash you can. And I like the other part is stand aside. It's okay not to be in a position. It's perfectly okay. Cash is a position. So with that, Anil, go ahead and take control. Show us what's going on with the triple screen for the indexes, because you said you had a huge surprise you're going to bust on us.
No, it's not a surprise. It's a confession.
It's a confession. Okay, go ahead.
So let me
turn my collar around.
Okay. Share. And now what happened? Let's see. Can you see my screen?
We do.
Yes.
Okay. So what I have here is a weekly chart for this is S&P 500, this is NASDAQ here, Dow, and I believe this is Russell 3000.
Right.
And it's the triple screen chart. So if I start with S&P 500, this is the COVID crash and turnaround, and we had a triple screen signal coming back. And that triple screen signal stayed all the way until now, sometime in early January, February period. Saying this is very unusual for this signal to appear, but it did. And sure enough, we have a signal in NASDAQ, signal in Dow, and signal in Russell. Weekly signals are very reliable signals on triple screen, and when they come, you better believe it. And I kind of, like Dennis said, got to have a written plan, and I had a written plan, and I still violated a little bit. So that's not good, but the signals were very clear. Now on, if you can just give me one more thing, and let me show the monthly chart on that thing.
And then I'll ask you, as you're getting up your monthly charts, so that pink arrow there that's pointing down, what was that telling you you should have done?
It says out. It's a sell signal.
sell signals. So you should either been getting out of your long positions and or going short.
You lighten up or short or whatever. Take some action for sure.
Okay.
And that
And
was
that signal was at what time, Anil? In early January?
Yeah, it came around late January, early February.
Okay.
Everywhere on all four indices. Now, if you look at the monthly, let me see if it comes up here. All right, so this is 20 years monthly. And one again, put it in context, this was the financial crash back in 2008-9. We do not have a signal yet on monthly on either S&P or NASDAQ or Dow. Dow did have a blip over here, but it's back. And then on Russell. One thing that's a little disturbing, if you see this thrust thing, it says turn from green to gray, which means either MACD or RSI has given up, and I know it's on the other chart, but both MACD and RSI has given up on all four charts.
Mm-hmm.
I hope the only thing that's keeping it in is because the EMA 8 and EMA 20 has not crossed yet. But if that does cross, that's big trouble, like we had here back in financial crisis and even back here during the dot-com bust. So we'll see what happens. And I thought, though, I'll just share this with you.
I love it. And so, Jory, I hope I'm pronouncing that right. Anil, what does a sell signal on your weekly triple screen indicate from an intermediate and long-term perspective? Anything, or is it a short-term use only?
No, it's weekly is a long-term. When the weekly comes, so watch out. That's what it says.
And that's, yeah.
Daily signals are, you can go either way, but when you see this weekly, let me go back to it quickly.
And Anil, as I recall from one of your presentations, on that weekly chart, you probably give the greatest reliance on the MACD cross, isn't it? Don't you? That's the kind of an early tell.
Right, and I don't have the chart here up, but take me some time. But MACD has given up.
Yeah. Okay.
All this, MACD had given up earlier, and then sure enough, after that, this final signal came.
Yeah. So awesome. Thank you, Anil. That's and I love how the triple screen basically confirms what the charts are telling us. And the charts were telling us way back in January that, hey, you know what? This market is looking very weak. Yeah. So I'm going to go ahead and jump back into the rest of our presentation.
Yep, go for it.
And cool. Thank you. Let's see. Now, just jumping right in there also. CRK, Comstock Resources, is this a gold company, Steve?
I don't know. I think it's more like Cliff. I think it's in the a little bit of precious metals, but other kind of mining also.
Okay,
but
cool.
I haven't really checked it out. What got my attention was it's on the IBD 50.
Yep, and it just had earnings.
Yeah, and what I like about it, it's in a very strong trend. It's defying what the market has done. I'm not ready to be a buyer, but once the market starts to hold, this is one individual I will be trying to get onto.
Okay, I like that. I'd wait until because the weeklies are showing a little bit of potential reversal signal to the downside for a pullback.
Right.
And here's the one I really like that you offered, Steve. Nat Gas.
Costco, yes. Oh, Nat Gas, yeah.
That's what that was. Yeah, Nat Gas.
Oh, okay.
Okay, I like this a lot earlier. I don't like it as much now.
Right. I was thinking it would hold. Today is a little bit of a surprise for me. I thought it would hold with yesterday's low. But we're at the range of a long-term, we're at the level of a long-term moving average. I think it's 50 at your dash line for you?
No, that's the 200.
200, okay. It's just under the 50. It was looking like it was going to hold and recover above the 50, but it's not. So I'd be giving it some time, but I am very hopeful, but I don't trade hopium.
Yep.
We'll put in a bottom, and once I'm assured we're at bottom, I'd be looking to take a long position. Yeah. As long as the market is firmed and has gone, at least the way I look at timing, the market is neutral to slightly bullish.
Okay, awesome. Yeah, just taking a real quick look at that. That is this hammer right there and that bullish engulfing on the weekly chart are still in effect for reversal signals. So right now we're just getting a pullback. Now it's a deep pullback, but with the market weakness, that's something that we would expect. So let's see. Like I said, earlier today when you first sent this to me, I had a nice hammer here, Steve.
Yeah, it was
and I was sitting there going, okay, a hammer at the 200-day or the 40-week moving average looks good.
A great example of why you wait to the end of the day before you draw any conclusions.
Exactly. And so Anil has Occidental Petroleum.
Oh, nice pick. It's been strong.
So what can you tell us, Anil?
I had actually a buy signal on Oxy 2 days ago on the daily triple screen. Weekly, it's been a long upward trend since months. And so it was a temporary weakness that turned around, and all the other fundamentals look extremely good.
Okay. And Oxy has it did stick its nose above the breakout level of, what is that? 63.56. So it did intraday break out a little bit, but just watch it against the moving averages. I like that. Oxy. And yeah, the Oxy, the oil companies are all very strong. Here's the ones that I have, guys. I'm going to run these really quick. Either Merck. Okay. Now, Merck is just hanging around here, needs to get broken out a little bit more. Looked like it was a breakout earlier this week, but now it's falling back down. Very similar to what's transpiring. Showing up a little bit of potential weakness on the weekly chart, but the drugs have been working. The other one that goes with this is Lilly. Now, Lilly, I like actually Lilly a little bit better because it's performing better. It's right there at the 820 moving average. You've got this bouncing 3 candlesticks right there. So I'd really looking to buy this anywhere from about 285 with a stop just below that, which would be about a little bit less than 5% away below if it dropped and closed below the 50 in this case. And the last one I have that I was looking at earlier, and I haven't looked at it here for a second, is an earnings trade on NVDA. Now it may have, NVDA. It's still looking kind of, pretty good. I like it from the aspect of we have earnings coming up on the 25th of May. I have a inverted hammer at a level of past support. Look over here to your left. At the same time, my momentums have not shifted yet, but my weekly momentum on the market forecast is showing a 3-line cluster. And real quick, Anil, when you say that MACD has given up, this is an example right here. That MACD is given up, yes, where it's crossed back down to the downside.
Yeah.
Okay. So that just lets you guys know that's what Anil was talking about. So there's my picks, guys. One of the things to remember is that if you're buying a stock or doing an option trade and it's coming from below the moving averages, those moving averages become your very first profit target. And you want to be basically taking some profit off the table, at least some, right there. Because as we see, and I'll throw this up really quick, here's one of the stocks that we were trading this past week in options, and it is SOXL. And what happened? SOXL popped up here, ran up above the 20 slightly, and then rolled over and dropped back down. So I've got a couple of things I want to share with you as we move along, and they are: one, review your trades and ask yourself, this has been a very, as we've said, an interesting week, a challenging week, a bearish week, whatever however you want to define it, a frustrating week, an angry week. But the thing to do is to get out of, if you're out of the market or you have closed some trades, is go back and ask yourself these questions. One, did I enter at my wholesale price targets, or did I chase a particular trade? The kind of market we're primarily working in right now can have chasing to get into what we think is a good trade as an issue. Define what you're willing to pay wholesale. Stick with your guns. If you get filled, great. If you don't get filled, great. Because what I find oftentimes is those ones that I don't get filled on, it actually turns out to be a blessing. Did I properly size? So a loss is within my rules. In other words, my rules, any individual position will not lose more than 1 to 1.5% of my total capital. And so that way, if I'm filled on all 10 positions I'm trying to get into, I'll never lose more than 10%. One, did I place conditional orders, or did I, try to fool myself and lie to myself that I will react to mental orders? Did I change stops once in a trade? Now, there's a good way to change your stops and a bad way. If the trade goes against you and you move your stops below where you put them to begin with, that's the bad way. If you move your stops to a trailing stops to protect profits and also your capital, that's a good way. In other words, you're moving your stops up rather than down. And the last but not least, what did you learn from this trade? Every trade has a lesson for you to learn. And then what will you do differently next time? As Peter Brandt likes to say, and I love Peter Brandt, he's been trading for, almost 50 years. And he said, if you don't know precisely what signal is yours and how you will size and manage your position, stop trading. And for some, watching the market meltdown that we're currently in may be a new experience for you. And if that's the case, my suggestion is stand aside, pay attention, and learn, because it will prepare you for the next bear market that will happen. That will happen. So remember, okay, before I get to that, I want to show you a couple of other things very quickly. One, here's one of the indicators that I love to use, and this basically gives me an idea. I don't trade specifically off this, but this is the percentage of stocks above their 20-day moving average on the NYSE. When it gets down below the 30 level, down into the 25s, 20s, and even lower, oftentimes that leads to a reversal signal that leads to a potential strong rally. We're in that area here. This last rally, we went from here up to here this past week. Well, I won't call it a fake out, but it basically has been reversed back down. But now we're getting some bullish or some positive divergence there. So that's one. Secondly, I discovered this on barchart.com, and here's the let me copy that and I'll slap that down into the if I can find the chat box. There we go. I'll slap that down in there for everybody. What this is, if you've ever wondered what the heck is inside of all your of the different ETFs, this is a great way to find out what is in there. This is the constituents of the Qs, or the NASDAQ. As you can see, Apple, and you can also say what percentage of the holdings is it. And NASDAQ is a weighted average. And so Apple is number one holding of this particular entity. What else might you want to take a look at? What's on the Dow? The diamonds. Just take a look at the diamonds, and it'll pop up and it'll tell you, here's what's on the diamonds. Again, it also is a weighted average. And so very interesting. You can also, and it's just great information to know. You can go over here and look at your leveraged ETFs. And here is the oil exploration and production. And it tells you what stocks are in that. And you can go in, you can take a look at them and say, this is very interesting. This is a non-weighted index. So I don't know if you've ever looked for that, but this is a very simple way to find out what's inside the ETFs and what's inside the individual indexes. So I don't know if you've seen that before or not. Steve and Anil, have you seen that?
Something like it's not a bar chart, but
okay. There
are other places you can find that.
Yeah, I saw it in bar chart. As a matter of fact, I learned it from you.
Oh, okay. Okay. So, okay. Hey, do you struggle with this? Spending over 2 hours per week finding strong trade setups? If you do, then AutoPilot Trading may be for you. And I will put a link down in the comment section on the YouTube channel of where you can find out what this is. If you are a BAM member, if you are a IBD Meetup member, if you're a veteran, I offer the same service for a 15% discount. Email me and let me know if you're a member of all those. So Steve and Neil, we covered a lot of stuff today. The market is still melting down. This market has not given us a big turnaround yet. So what are you going to do this weekend to get ready for trading next week?
Prepare a good watch list.
Yeah, just working on the watch list, looking for things to buy when the market gets neutral.
Okay. So there's a lesson there for everybody is good traders, they don't, throw the baby out with the bathwater when the markets are being ugly. They basically still work on honing their skills and also being ready because the next reversal will be, there will be one sometime in the future. You got to be ready for that, knowing what stocks and or ETFs you're going to be utilizing. So, hey, looking forward to continuing 2022 with patience and persistence and consistency. Aloha, trade well and prosper, and mahalo, as we say here in Hawaii. God bless everybody. Anil, thank you for the triple screen overview. And Steve, thank you for your fantastic words of wisdom for everybody who's trading.
Okay, thank you.
Our pleasure.
Okay, guys. Have a great weekend. See ya.